What's up, people? Oh my gosh, I almost tripped on my stairs walking, trying to start a video at the same time, and whatever. So this is for like super beginners, because apparently a lot of people don't get it. A lot of people trying to get into this stock market thing. I think that's great. I love what Robinhood did by making a zero commission platform, and it made it seem very, it lowered the barriers of entry, right? And now they're doing like fractional shares and stuff. I mean, this is awesome. So I think it's cool. It's actually good for investors. I'll tell you why it's good for investors. Because it's going to be more demand, changing prices, increasing volatility, which at the end of the day is profitable for anybody that's investing. And anybody that's saying they're not in it just to make money off of the volatility, they're lying their asses off, because that's really like the only reason anybody's in the stock market is to make money, and you make money off of volatility. With that being said, it seems like a lot of people need some pointers on how to really navigate this stock market thing, like as soon as they get in. Now, there's a lot of different types of strategies, I guess, that people talk about. I think half of it's just stupid crap. I think half of it is like people trying to mislead you and tell you some bullshit, so they can like take advantage of you. Because at the end of the day, let's look at this. Let's look at the stock market. If you buy at a low price, the price goes up, and then you sell it for a profit, who do you sell it to? You sell it to somebody, and in your mind, you're thinking that's a good point to sell it because probably you don't think it's going to go up anymore. So you're basically duping it off on somebody that is probably stupid, that you would, they're doing the opposite of what you're doing at that point, So, the stock market needs dum-dums, So I think a lot of people, they'll be out here, and they'll freaking, tell people some bull crap, like, oh yeah, just buy this, I see that all the time. I see these posts where people are just like, oh yeah, this is going to the moon, buy it, da-da-da-da-da. They're hyping up these things that they probably bought at a super low price, trying to get everybody to buy it, increase the demand, increase the volatility, cause the price to go up so they can sell, dupe it off on some idiots, right? That's the name of the game. If you can do it, it is what it is. It's it's just like anything else in the economy. It's trading. If you freaking can find a lump of coal and sell it to the next guy for $1 million, if you can hype them up and convince them they should buy it like that, there you go. So with that being said, I'm more of a nice guy. I don't. There's gonna be volatility. There's gonna be people that come in. There's gonna be people that don't even have a clue and they just got money. That's gonna throw it at some stuff. So I mean, there's always gonna be some dummies to hand it off to. I mean, just you can actually see with the volatility, like how people are thinking. Quite often you see these runs, these major run-ups. You see them when people are chasing those gains, basically. So that's something I call the investor cycle. I've made entire videos talking about that, and it's not a hard concept. It's really just people want to catch those gains, right? So they'll jump on board, which increases the demand, which causes the run-up, and then the opposite. When the opposite comes, there's short sellers, but there's also just the people, they see that it's not going up anymore, so they just sell like right off the bat as soon as possible. They don't want to lose the gains they got, so everybody starts selling, and it's a rapid decrease in price, and that's where you see these major spikes, and you see them every so often. Sometimes you see these like staggered increases. Those aren't the type of exponential run-ups that I'm talking about here. Those are more like people are unsure. They're buying positions, getting out of it. It's more like it's not a clear rocket taking off. So I guess the first thing I'll say is obviously you want to profit off of the volatility. So you have to be able to get in at a low price before those rockets take off, and that's on the upswing. On the downside, you could do the opposite. You can short sell, and you got to look into all these different like literal specific strategies, which are like I mean, I don't even know if strategy is the word. Maybe moves that you can execute. There's short selling, there's options, there's It's things like that. They're not very complicated. I've made a couple videos on them. So you have what I call the investor cycle that's occurring quite often, and quite often you see these like rockets that just take off, boom, crazy. That probably is like the most important thing, and the important thing to understand is that those aren't caused by anything other than the investors coming in, bidding up the prices and causing the prices to skyrocket. It's not like there's some earnings. I mean, there could be an earnings report that like triggers it, but for the price to actually go up, what's actually happening is a change in the bid-ask price. You know what I mean? And quite often when you see those major run-ups, it's people that are trying to, you know, jump on a train they're trying to like catch that rocket as it's already lifting off, and like they're all like, you know, trying to get in. So they'll put bid prices that are like higher than what it currently is, because if you look at it, if you you could do a market buy, which basically you're gonna buy at the ask price, and you know, whatever the price is on the chart right there, you know, you're gonna have to buy it at like a little bit higher, but you're gonna buy at the ask price, and when you buy at the ask price, that is going to shift the mean buy ask. I guess it's what's it called, the mark price. Yeah, so it'll actually shift the mark price up, which is going to appear on the chart. And because most people, they do limit orders. If you don't know what all this is, just go look it up. It's not hard to understand. A limit order, you basically set a specific price that, you know, like the highest price you'll buy for. If you buy a market price, you're buying at the ask price, which is what the seller puts a limit order out for, the lowest he'll sell for. So you go up and meet at what he's asking, and so that's going to shift the overall the mark price that's actually tracked on the chart. And you know, so what you see when people are trying to catch these rocket ships going to outer space, whatever, going to the moon, as they say, are people that usually they'll either, you know, hit the mark, or they'll take the market price, which will shift that mark price up. They'll do a market whatever. They buy it at the market price, which is the ask price, and or they'll set a limit order, which is higher than what the current mark price is, to try to catch it on the way up. You know, because if you do a market order, that's what the word I was looking for. If you do a market order while it's going up like crazy, you might end up like buying it for way higher than you really want to, because, you know, people are setting those limit orders for selling, and, you know, half the time they set them like super high, like, because they see it going up. They're like, you know, some dummy's gonna they'll either buy it at that price, or I guess, you know, they'll probably just do a market order, and you know, they can get that for it because it's, you know, running up exponentially. So if you do a market order with that, you're probably going to end up buying it for higher than what it currently is, what the mark price is. I mean, you will. You probably buy it a lot higher than you really want. But the point is, that's the real function that makes the exponential growth occur, or it makes the mark price, you know, go up exponentially. It's people chasing the, you know, they're trying to get in, catch that rocket while it's taking off, you know. They're trying to get to the moon, right? And so that's what you really see. And then at some point, so that's like the upswing on what I call the investor cycle. And at some point, the investor demand dries up. So basically people are looking like, they don't know if it's going to go up anymore. They think they already missed the ship, you know. So nobody else is coming in, and it starts to slow down. When it starts to slow down, that's when people are like, okay, I guess we hit the moon. You know, we hit the peak of this run up. So everybody starts selling. As soon as people start selling, it just goes boop. That's when everybody sees it, and everybody tries to sell at the same time. So they all dump it, and you see this major, it's like the opposite. It just straight up just free falls into nothingness, and people are trying to sell. Nobody's buying it because it's decreasing. You know, everybody's just trying to dump it, and that's what happens. That's what I call the investor cycle. And then it usually goes down to a price, and a lot of people think in their heads, oh, it's going to bounce, and then they do the same thing. They start buying again, and then half the time they actually, I mean, not half the time, sometimes, not always, they start buying it up again, and it causes the price to spike again. It does the exact same thing. That's why I call it the investor cycle. It happens over and over, and you can see it. I mean, sometimes it just happens. Like, there could just be like some random news report that's like, oh yeah, this thing's gonna go like I don't know. It says some new thing is invented or something. Everybody's like, oh, buy this, and all of a sudden just crazy spike. And I think one of the craziest things is like some like market analysts, they try to say like a company's value is like, whatever the current market price of any given stock is, times the number of outstanding shares. But it's like, that's not even accurate. The price can swing crazily based on some little news report. And I mean, really, there's no way that every share could be sold at the current market price. It's at the current market price. That's not even an accurate thing to say. You know what I mean? It's just poor, economic analysis, whatever. But a lot of people say it. A lot of people will say like certain people's net worth is like this much because the current market price of a stock they hold is whatever it is like, but that thing, we see it all day. The prices go up and down. And really it's determined by a supply and demand function of investors. That's all it is. That's why the price goes up and down. And that's what people really need to know. That's like the main thing people need to know. You always hear these people, like right now, I gotta give this example. I'm not even gonna give this example. A lot of companies aren't doing well, but stock prices are still going up. And a lot of people are like, how are prices going up if these companies aren't even like, doing what they're supposed to do? And it's like, because the stock market is a secondary market. It's a speculative market. Prices change with supply and demand of the investors. It can literally be like a rumor that causes something to start going up or down. It just it's the bid-ask spread. That's all it is. People will make offers and, they'll meet at some point, which is the mark price. And that's what you see charted. You know what I mean? So like I said, if they're trying to catch that rocket to the moon, they're going to, probably move that thing up because they're trying to catch that rocket as it's already taken off. If they're trying to dump it, it's going to go down quick because they're trying to sell it, and people, and really the sellers, they'll meet at the bid price because nobody's like meeting up to the ask price. So the sellers, when everybody starts dumping it, will go down to the bid price, and that's what you see. You see these crazy run-ups and sell-offs like that. You see what I call the investor cycle, charted on these charts, right? And it's really not a hard function, but that's the thing. They don't tell you this, man. A lot of these institutional investors are like, oh, we have to do fundamental analysis. Look at the company, and that's the thing is, the truth is, a lot of people will do that type of fundamental analysis, and they'll actually trade according to their fundamental analysis. So quite often, the stock price will do kind of, what they expect according to the fundamental analysis because they act in accord with that fundamental analysis. And honestly, understanding that, you can pretty much expect other people to do that to some degree at least. And it is, because of that, an accurate, way to assess any stock investment, you know what I mean? But it's not always. Just like I said, right now, a lot of companies are not doing what they're not up and running like they were a little while ago, right? But the stock price is still going up. And there's so many people just like, how does this make sense? The companies aren't even like running right now. How does this make sense? Because it's a secondary market. It's a speculative market. It is a secondary market. I'll give you an example. Enron said they were doing this, and this. It turns out they weren't doing half of it, but the stock price was still going up, and it was going up. It had nothing, and the company wasn't even doing what it was saying, but the stock price was going up. Why? Because it was impression, okay? Because people believed it was, so they bought into it. You see what I'm saying? And so the stock price went up, and then eventually got found out, and a lot of people sold their shares before, the news reports got out, and they got in trouble for that. So that was the whole thing. But another example is cryptocurrency. Cryptocurrency doesn't even have a company, but it's freaking, in 2000, it spiked like crazy. It had like a crazy run up from minuscule numbers to like crazy numbers. You know what I mean? There's no company behind that. That just happened because of a supply and demand function of investors. It's the exact same thing. It can happen with any stock, really. You know, but a lot of people generally, you know, they believe that, you know, what these stocks are doing has something to do with what the company is doing itself. But it really only does because people believe that and act upon that belief. You know, the truth is, it's a secondary market. It's independent. There's a supply and demand function for these stocks, which causes the market price to fluctuate. And that function is independent of anything any company does. It is. I mean, but like I said, people usually go along, you know, they believe it has something to do with what the companies do, so they act in accord with it. So you see correlation. It's not causation, though. There's correlation, but not causation. And with that being said, I mean, that's like probably the most important stuff you need to know. It's really not hard. It's you have to understand it's a secondary market. It's an independent supply and demand function, and it's driven by a change in the bid-ask spread. You know, like I said, when there's a run-up, people meet up to the ask price. When everybody's trying to sell off, the sellers are meeting down to the bid price, which causes a change in the mark price. It's very simple. It's very simple stuff. So that's what you see charted. And, you know, sometimes you can see some crazy fluctuations in stocks, but there's no trade volume. It's just like a couple people that are like trading at stupid prices. You know, honestly, like some people could like trade between their friends, you know, like, hey, let me sell you this stock at this price. And, you know, let's see that marked or, you know, charted on the chart right there. You know what I mean? Like, let's see that mark price change on the chart. Like, you could do that, you know. I could probably go to 2 different accounts that I have on 2 different brokerages and do that, and you'll see it on the bid-ask spread. You'll see it. You'll see my bid, that ask. I mean, you'll see you can see that that mark price change, you know. And I mean, that's a real thing that can occur. You know what I'm saying? And so you could just see how you can do that yourself. You know what I'm saying? So the whole takeaway here is that it really does not have much to do with what companies are doing, but people believe it does, and they act in accord with that belief. So you do see correlation, but it's not causation. And that's why so often you see these random run-ups and you see like people confused. They're like, hey, like, why is this stock price going up? Like the company didn't even do anything. It's because it's a secondary market, a supply and demand function. It could be a rumor, it could be hype, it could be anything, randomness. It could just be something taking off and people see it, they're like, oh, I gotta catch that. It's going up, I gotta catch that. So they start chasing and it causes it to go up. It could be no news report whatsoever. It could just be some random company that nobody even has seen, whatever. That's actually like that's the premise of like most penny stocks. Like sometimes there's a news report that like causes it to like, you know, take off. But sometimes it just like randomly takes off. People just decide this is the one that we're gonna buy today, and like everybody starts buying it and starts taking off, and people want to get on that, so they chase it, and it causes that change in the mark price where people are trying to catch, you know, that rocket, you know, jump on, get on board, and they're meeting up to the ask price, and that's it. It's a supply and demand function. You gotta understand how it works. It's very simple. It's so simple, man. And I don't hear anybody talking about this, dude. Like, all these intuitions. You know what really inspired me to make this video? I heard a stupid commercial with this dude's like, oh, get in on this freaking new technology. Nobody knows about it. If nobody knows about it, it's not going up, bro. It doesn't matter if it's the best technology in the world. If nobody knows about it, they're not going to invest in it. So the price ain't going to change, dude. Like, and I'm just looking at that. I'm like, this is stupid. Like, I know this. Other people might, like, you know, be buying up this rhetoric. Oh, yeah, it's a brand new technology. You better... Maybe people will later on know about it, so maybe it is good to get in early, and maybe later people will know about it, and then it'll go up. But if nobody knows about it, they're not investing, so the price ain't gonna go up. It's you gotta understand, dude. It's a speculative market driven by supply and demand, and that has to do, like I said, it can be a low volume change in the mark price. But quite often, you know, the major run-ups are caused by high volume trading. You can see it. You can do pre-market scanners, and I've done this. You can do pre-market scanners that scan for, like, you know, major volume shifts, or actually something I like to do. I like to do a pre-market scanner for like major drops, because quite often those are gonna bounce the next day. So I search. I'm like, let's look for something that dropped more than like 10% like overnight. And if it dropped like that, and then I'll see like, is there a news report that caused that? If it's just a random drop, you know, I'll look at it and like consider it might bounce. So those to me are like, you know, you can get in before it takes off type thing. You know, sometimes there's a major spike and you see an opportunity to short sell. You know what I mean? I just saw one of those yesterday. Thing went from like $6 to like 100 in like a couple hours. I was like, are you kidding me, bro? I actually didn't get on that one because I disabled margin from my account. So you got to learn all that. Those are like fundamental, like I said, like, I don't know, like execution strategies. But overall, just understanding the market, what's causing the fluctuations. That's really what I'm trying to explain. So that's what you need to know. I mean, there's a lot of people out there that'll tell you something else. They're like, oh yeah, this company is a good company, so the price is gonna go up. Like, I mean, like I said, there's correlation. There's correlation, but it's not causation. You know, like I said, like cryptocurrency. It's not even a company, but the freaking the prices went up like crazy. I mean, that's just a blatant example. And you can see it with a bunch of random other stocks, like the one I saw yesterday. I forget what it was even. It went from like $6 to 100. And honestly, it has a type A stock and a type B of the same company. But the one of the types didn't even go up, so it had nothing to do with what the company's doing, because it's the same company. The one of them just decided to go up like crazy. It's just an anomaly. It's a supply and demand function. That's really it is. That's really what it is. So there you go. That's really all you need to know. You know, I don't hear anybody trying to tell people stuff like this. You know, a lot of people they tell you all this BS and they try to sell you stuff. They try to say, oh, buy this. Half the time they already bought in at a low price and they're trying to hype up their own thing, get people to buy so the price will go up and so they can sell and dupe it off on somebody. That's half the time what they're trying to do. That's what really happened with the cryptocurrency. Everybody was like hyping it up. It's going to the moon, yeah. Like, I guess they were hyped because it was going up. But like I said, it's they were chasing, trying to catch that rocket to the moon, and they end up, you know, buying up to the ask price, which causes the mark price to shift upward on the charts. And that's exactly what happened with cryptocurrency. It went up like crazy, and I don't think most people understood this. They just kept chasing. They said, "Oh, cryptocurrency is a new hot craze. Let's get it." Da da da. You know, people that bought in super early are like, "Oh my gosh, this is all these dummies coming in, not knowing nothing." You know, they ended up, you know, for you to actually cash out, you have to sell it to somebody, and really you're gonna sell at like the highest point that you think is gonna go. Otherwise, you just hold on to it longer. So, like I said, you know, you're selling it to somebody who's basically doing the opposite of what you would do. You know what I'm saying? So you're basically duping it off on somebody. I mean, that's just how it goes. It's a supply and demand function. It's not a hard concept. It's a very simple concept. It's trading. It's trading. Like I said, if you find a lump of coal, you can hype somebody up to buy it for some crazy price. There you go. Same thing. You really have to, I think the main thing you have to understand is who is buying and selling in, you know, the stock market. It's traders that are trying to make money. So you have to understand the psychology, you know, why they would buy or sell. And you have to work with that. I mean, that's like the main thing you probably need to know. So get your head around that. Anyway, I think that's all I got to say for now. So I got to go. I'm actually going to go buy dry erase markers because I lost mine. That's why I'm making these outside videos with all this drama. But I hope this is helpful, man. I actually like just spinning it out like this. It's a lot easier for me. I don't actually like the whiteboard too much. I just sometimes think it's makes me look official. I don't even use it half the time. I have videos I just stand in front of the whiteboard and don't even like draw on it at all. I just stand in front of it and like, screw that, bro. I just be out here chilling, like whatever. Anyway, that's like the main stuff like you need to know. Like I said, there's specific like execution, like strategies and stuff like that. You know, you can go learn about all that. But generally speaking, this is to explain the, you know, I guess the investor psychology and what's causing these fluctuations, you know. And that'll give you a leg up, you know, for anybody, you know, compared to anybody who doesn't really know this stuff. And right now, as it stands, it don't seem like, I think a lot of people do know it. I just think nobody talks about it because really they want a bunch of dummies coming in, making the prices go crazy so they can dupe whatever they're selling off on them, you know. And But, you know, like I said, you know, there's always going to be somebody out there, so I ain't too worried about it. And honestly, the more people that get into stock investing, and maybe this is going to inspire that, the more people that get into it, the more there's going to be more demand, you know what I mean? And there's going to be more volatility, more fluctuations that I can profit off of. So it is actually a positive for me to teach people this stuff, to inspire them to get into the market. I mean, it's a win-win. So there we go. Anyway, it's just something I want to explain. It's very simple stuff, so there you go. I got 100 other reasons I want to explain that. I just think people need to understand economics in general, so there you go. And with that being said, I think that is all she wrote on this video. I'm going to go get some dry erase markers, and then I'll probably never use a whiteboard again because I don't really like it, so I'm going to get those for nothing. That's what I'm about to do. I will talk to you guys later. Like, subscribe, share this. You know, look, man, like, share it, because I'm trying to get my word out, my knowledge, you know what I mean? I know you might want to keep this to yourself, not tell anybody, but, you know, you got to do me a solid, and you don't got to. Because I know how people are, you know, like, I already know the nature of people, too. Like, I can do people all types of favors, don't mean they're going to do nothing in return. So, you know, I'm doing this. Maybe I'm going to do my, you know, you're going to be my out, you know what I'm saying? I'm going to do some stocks on you, you know, so that's going to be my my return favor. I have no idea. Anyway, I'm going to let y'all go, and I'll talk to you guys later. Be safe, be smart, be awesome. I'm out of here. Much love.